This.
Trina, coming up on South Florida today, we've seen the for sale signs lined across South Florida neighborhoods for a long time. So what does the recent market meltdown mean for the already shaky housing market? We've got an expert here to answer some of your questions.
This is NBC6 South Florida Today.
The government's $700 billion plan to bail out the banking system, the whole financial industry actually, may calm panicked financial investors, although they don't seem calm again today. The market's down over 200 points right now. What about the bailout? How does it address the continuing slump in housing values? Joseph Meyer is president of Meyer and Associates, and he's here today to help us understand what's going on. Hey, Joe, thanks for being with us.
Good morning, Bob. Thank you, NBC and South Florida Today, for having me. It's a pleasure to be here and visit with you.
First of all, tell us what Meyer and Associates is.
We're a management consulting company, but I'm also a security law expert, and I continue to serve as an arbitrator and mediator with the old NASD NYSE, which is now called FINRA.
All right, we saw last week a couple of the worst days in Wall Street history, followed immediately by a couple of the best days in Wall Street history. Those who got frightened after the first 2 days and got out lost a lot of money.
Yes.
Those who kept their heads and stayed in 2 more days are okay. A lot of people thought the roller coaster ride was over. Clearly, we can see today it is not.
No.
What do you expect in the next weeks and months?
Well, quite frankly, I don't think the roller coaster ride is over, and I think we're going to continue to see volatility, and we're going to continue to see very sharp moves in the market, both up and down. But I think we have to realize that we're all Americans, that we've been through a depression before, we've been through world wars, and we've also been through 9/11. We have to pull together, we have to understand the bigger picture, and we certainly have the talent and the ability to solve these problems.
A lot of people, though, have difficulty, Joe, looking at the bigger picture when they're in a home that's suddenly worth a whole lot less than they paid for it. People are having trouble making their payments. People are getting ready, or some in foreclosure. There are just thousands of homes in foreclosure, ruining neighborhoods because there's no one there to keep them up. I mean, what do you tell someone who's in a home right now that's worth more than a whole lot less than they paid for it and is having difficulty making the payments? What do they do?
Well, I think at this point, Bob, honestly, it's too late to sell in a lot of instances. And I think if you're in a home and you're in a good area and you plan to live there at least for another 3 to 5 years, that you remain in that home. I think the biggest problem moving forward with the government bailout is what can they put in place to allow people who are currently in trouble with their mortgages remain in their home as they work their way through possibly foreclosure or refinancing of the mortgage itself.
All right, we're out there right now getting ready to bail out all these big corporations.
Yes.
Are any of these homeowners with bad mortgages going to be helped by any of this?
Well, I think that's the key as this plan now is being put forward. There's a lot of unanswered questions here, but I would hope and certainly want to think that in this bailout and in this plan, there's going to be, at a minimum, some relief for these homeowners that are currently in trouble.
A lot of people are frankly sick and tired of golden parachutes that are given to CEOs who, by bad management, have played a big part in ruining their companies.
Yes.
Would you like to see an end to that, at least for companies that are being bailed out now by the U.S. government?
Well, I think it's very important that we bring responsibility back to Wall Street. We bring back accountability. Going back in the 1970s, CEOs made roughly 20 times what the average worker was earning. With the abuses that we've seen now over the last couple of years, we've had CEOs making 400 times what the average worker was being paid. So we've had an abuse with compensation. I think it's something that has to change, and I think we've probably reached a point now where the public is looking at this and considering it intolerable.
How close did we come to financial collapse before this buyout was announced?
I think we probably have come as close as any time in our history, and hopefully now we are on the road to recovery, and we are going to see, I think, a lot of changes made. I think mistakes were made. I think we have learned from them, and hopefully, as if we all pull together as Americans, we can get through this.
Joseph, thank you much for being here.
Thank you so much for having me.
To learn more about Meyer and Associates, log on to NBC6.net, click on As Seen on NBC6, and we'll connect you. Kelly?